My guess is that stock probably fades in the next 2 weeks, finds its ground, and then as we get closer to 25, starts to rebound.
We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup.
Well, I think what it's come down to is there's a question, is Tesla smoke and mirrors or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and robotaxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock, it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on delivery, so I think that could pressure the stock tomorrow. But ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic. And I think that I just believe in what they're doing from an innovation standpoint.
Do you think the stock movement is justified based on what we got from the release, just on the next gen vehicles and perhaps better than expected margins when everything else was pretty crummy?
No, it's understandable. I mean, you can reason why it's up because people are so desperate for any good news. And given the Reuters reporting more recently that they're canceling this initiative on the 2025 initiative, the fact that they're moving it up, that is a directional positive. But again, I think that 2024 is a throwaway, and stock could keep going down. It could be flat. If you again believe in a future of electrification, Tesla's the best positioned company. But as far as this results, my guess is that stock probably fades in the next 2 weeks, finds its ground, and then as we get closer to 25, starts to rebound.
Craig, anything that you saw in that letter today that is changing your opinion? I believe you're at a neutral on the stock. Anything you heard today that would change things?
Yeah, I'm neutral with an $85 price target. I'm very bearish on the valuation, right? I think it should not be valued at a premium to Toyota. There's nothing they have that Toyota does not, right? You know, people were looking for a potential adjustment around the Cybertruck outlook. Doesn't look like we have that. It might happen on the call. I think there have been more challenges there than anyone hoped for. You know, this is still a very difficult year for Tesla. It is a big negative setup. You know, you will see more margin pressure over the course of the year. You know, 6-7% price cuts just this last weekend is a big deal. You know, and doing a U-turn on India is not smart. They did that as well in 2019. They should have started then. If they'd have actually gone into India in 19, the supply chain would be mature and their costs would be great. And, you know, they wouldn't be scrambling for an alternative to Shanghai. So, you know, there are lots of issues for them to address at Tesla. Nothing fundamentally changes the way I'm looking at this. I think the consumer is not open arms for EVs right now. I think the EVs have got to come down in price, and they've got to be a compelling proposition for consumers. Cheaper cars, they get same miles, safer, better technology. That's the proposition that they're maturing into. But we've got more price cuts ahead to get there.